Good, yeah. Looking forward to Christmas now. Had a bad cold or flu or something there, which actually wiped me out for nearly 2 weeks. Thankfully over that. Yeah, basically yes. Yeah, all good now though.
Yeah. Okay, no, great. I'll jump off. If we have enough speakers, it's fine. I got plenty to do. Yeah, thanks so much. I'll check. I'll check. All right. Have a great session. Thank you.
Yeah, I can't speak for everyone.
Yes. Yes, I can.
And I mean beyond terrific session. So bear with me for just a second. I think we've got it. I'm just now going to share a nice image with everybody here so that it goes onto the live streams. I'm good. Rightio, good afternoon, everyone. Thank you very much for joining us. This is Startup Fundraising Q&A. It's our 162nd session. We've been doing these for just over 4.5 years now, where we've been trying to help founders with questions on how to go about fundraising and doing it right. You see, unfortunately, over 90% of startups fail. And the top 3 reasons for that are 1, market fit, 2, running out of money, and 3, not having the right people. And there couldn't be anything more important about your ability to fundraise when it comes to you running out of money. Most of us will run out of money, especially if you haven't got a rich auntie or uncle leaving you a half a fortune, or maybe mums and daddy's banks and all that jazz. So what do you do at that point? You can go to a bank, you can go to an investor, you can try and raise a crowd fund, you can try and go for a grant and all that jazz. This is why we're here today, to hopefully help some of you not only survive that fundraising game, but thrive at it. I have got 4 brilliant experts with us today. They've been there and done it, both as investors and some as consultants. And I think there's a few things that they have encountered that it would be good for us to understand today. Now, here's what we're going to do. We are going to go through some quick introductions. Then we'll open it for some do's and don'ts. So I'll be asking the panelists for a do and a don't that is important when it comes to early stage fundraising. And then we'll open it for questions from the audience. As often happens, we're only here for the next 54 minutes now, which means that you are like, or we are likely to run out of time if you don't get in with your questions as early as possible. So again, we've only got 54 minutes to go. The way this is going to work is that you type in your question in the chat. Then in that order as to who types it first, I'll give you the mic, you introduce yourself, and then fire away with your questions. There are no right or wrong questions. There's no need to be shy because it's a learning curve for us all. And your questions today can be on anything to do with fundraising, whether you want to know, first and foremost, if you should actually fundraise, if you are fundable. Perhaps you may want to know how to go about it. Should you go to an angel, to an impact investor, apply for a grant, or maybe go to a bank or a VC and all that jazz? Maybe you want to know how and when to start preparing your data room, or maybe how do you best design a pitch deck and all that jazz. Now, the way we're going to go through this today, it's you, like always, you have to do it via our Microsoft Teams call. So if you are on the live streams, whether you're on LinkedIn, YouTube, Facebook, Instagram, and now on Twitter/X, that means, unfortunately, we are unable to monitor your questions. So you'll have to join us here on Microsoft Teams. It's audio only. And the beauty of that is that you can join us from anywhere via any platform or device, whether you are, I don't know, having lunch in Liverpool, or cooking lunch in Glasgow, or working from a shared office in Shoreditch, or walking your dog in Surrey, or changing baby nappies in Bristol. You can be anywhere via any platform or any device and still able to join us and get the right help that you need to fundraise. If, however, your questions today are not on fundraising, please save them for the other conversations we run. On Mondays, it's talent. Tuesdays, product and tech. Wednesdays, growth. Thursdays, fundraising. Second Friday of each month, it's UK startup law. And third Friday of each month, it's UK startup finances. They're all from 12 to 1 p.m. UK time. They're all available on our website, startuptoscaleup.club. Again, it's startuptoscaleup.club. When you go there, simply look at whichever session you want to join. So for those of you now today that are on the live streams, and if you want to join us, go to startuptoscaleup.club. Again, startuptoscaleup.club. Scroll down a tiny bit, you'll see Startup Fundraising Q&A 162. You click join. It's a quick registration on Luma. That will get you to the page that has the link for Microsoft Teams. And there you just need to click and join us here. So without further ado, some quick introductions. My name's Anton Cole. I'm an Albanian in London working with startups normally right after they get investment. I embed within their teams and help them hire and keep the right people. I also do some growth advisory work with a few other founders and some accelerators, and help some angels and family offices with their due diligence and assessments. We'll start with the ladies of the house. So Dama, Angelica, and then Tommy, and last but not least, Dan. Take it away, please, Tim.
Yeah, hi everyone. My name is Dama, pronounced as she, her. I'm one of the partners at Bethlehem Green Ventures, and I've been at the firm for about 8 years now, which is still a very exciting time to actually meet founders on a day-to-day basis, and sometimes hear the very bonkers but amazing ideas around actually using technology to drive positive outcomes for people on planet. So very much sit on the deal flow side and do a lot of portfolio support around actually coming up with mitigation strategies to mitigate some of the negative consequences of technologies as companies. Yeah, very, very, very excited to be part of this conversation. We at B2B largely invests into pre-product, pre-revenue startups through a Tech for Good program that we run twice a year. We do about 25 new investments with an initial check of 60K for 7% equity, largely into pre-product, pre-revenue businesses, but have a large follow-on reserve to actually lead your pre-seed or your seed round. Or co-invest up to Series A, where we can initially put up to $1 million into the best companies that come through our doors as well. And I'll hand over to Angelica.
Thank you. Hello, everyone. My name is Angelika Burawska. I'm a COO at SFC Capital. We are a leading fund investing in SCIS and EIS startups. We are reaching almost 600, or very soon we'll reach 600 companies in our portfolio. We invest in early stage ventures and then follow up in the best performing companies from our portfolio. And my role is to oversight really the entire process on both investor and startup side. Thank you.
Hi everyone, my name is Tommy Breen and I'm a senior advisor at the growth stage. So we are a capital raising platform focused on scale up businesses. For those companies that have managed to get to a Series A, we come in and in some cases we'll support a Series A, but mostly at around a Series B and into much later rounds. We help companies raise institutional capital. And then outside of that, I'm also a mentor at Founder Institute. So I spend quite a bit of time with very early stage founders. So right when they're at the ideation stage and trying to guide them through how they, do some market testing, get an MVP together, and what a go-to-market strategy looks like at the very earliest stages.
Thanks, Tommy. Hi, Dan. This is Dan Ballin here from Ideas Crucible. I'm Chief Executive of Ideas Crucible. I've been there as a practitioner. I've had 4 startups that I've raised for, and I've exited a few. I'm an angel investor, just done one this week. I run a boutique VC where we raise investment for a lot of late pre-seed to Series A+ startups in the UK and US.
This is amazing. Thank you very much to all 4 of you, team. Really appreciate your time today. Right, yo, you've heard them, people. We've got 4 amazing panelists, and we are going to make use of them as much as we possibly can in the next 47 minutes. By the way, team, how about you drop your LinkedIn URLs in the chat and maybe just a quick explanation about what your maybe the one thing that is you focus on when it comes to startup fundraising. In case anybody wants to reach out to you, because again, I said at the beginning, we've had about 290,000 people tune in, and obviously none of that would have happened without people like you, Dharma, Angelika, Tommy, and Dan. So the least we can do is give you a few more followers. So please feel free to drop your LinkedIn URLs. We are going to go soon to some questions that have just been put in the chat. But before we get there, how about some do's and don'ts? Let's try and keep it at 1 minute each. Let's try and make sure, let's make sure we don't use the same logic for both the do and the don'ts. And I'm sure you've seen some horrible stuff, but also stuff that was impressive out there when it comes to early stage. So maybe we can start with Tommy, and then Angelika, and then let's go to Dan, and last but not least, Dharma, please. 1 do and 1 don't of early stage fundraising in 1 minute.
So the do for me, I've been saying it on here for the last few months to founders, we're in a sort of a new era where over the last 12 to 18 months, the proliferation of vibe coding tools has made, spinning up software and copying products way easier. People can copy your idea in a weekend once they see it. So at the very early stages, software is not really a moat. And I think that's put go-to-market strategies more in the spotlight for investors. So that's always been important, but it's important to demonstrate you actually have thought clearly about how you're actually going to get your product into your customers' hands. Is that through partnerships, but not just is partnerships the idea, but how are you actually going to execute in those, because they're really difficult. So showing a really well thought out commercial mindset and how you're going to go to market at the very early stages and being crafty is important. And I think at risk of disobeying Anton's rules, not using the same one for a do and a don't, the good thing and the other side of that is for founders is those vibe coding tools have made it so easy to actually put together MVPs and to do market tests. And you can put together a few app screens that are actually functional so people can tap and do stuff in it. It's much easier, much cheaper than ever before. So there's not really any excuse. Like at the very early stages, you should be able to get an MVP together for pretty cheap, and capital shouldn't be the roadblock unless you're doing something that's properly complex and deep tech.
Well, I will start with don't treat investors as ATMs, because they are not. The moment you take investment in, it's not your company anymore, it's shareholders' company, and investors will be shareholders with their rights. They will want to participate, some more, some less, but that comes with the money. So they want to have some oversight, they want to have some influence. It's normal, don't be afraid of that. Do, however, research your potential investors, particularly if they are not institutional investors, if they are individuals. Make sure that they understand the risks, that they can take those risks, that they are not investing on the back of excitement. I've seen some wealthy individuals who were investing and then losing money, and that was life-changing for them. You don't want to have that responsibility. So do research, particularly if you're approaching individual angel investors.
Great
Did you
advice,
just try to, sorry, Dan, did Angelica just try to insinuate that investors are people too?
Probably.
Thank you. Go ahead, Dan.
Yeah, I think that was great advice by Angelica, and you've got to maybe I'll build on that more than replace it, in terms of also remember investors have their own investors. So they're not just ATMs. The cash they have, they've got to spend wisely and justify it to their investors. So bear that in mind. The big don't to me is don't go out for an investment until you're ready and you've thought through not just this round, but probably any of the following rounds, and probably whereabouts you're going to finish in an exit. So make sure you got the whole thing planned. If you go out to investors too early, they often don't want to see you second time round when you are ready for it at the end of the day. And enjoy the journey.
Yeah, that's all great sage advice. I will not repeat any of that, but possibly, I mean, the spray and pray approach is something that we see quite often at the early stages. Particularly also because it's now easier to get automations in place where you just have sequences going out, even if your email keeps being unread or you're being ghosted by investors, which is not always because it's not the right idea or it's not the right fit, but also the sheer volume of deals that we are getting into our inboxes, into our DMs on different platforms is not manageable. So be patient would be my do. And don't be an asshole would be my don't, because quite often now, and it might be a bit of a gender thing, but quite often we're also now receiving emails where people are quite demanding in terms of, and quite entitled in terms of the sort of responses, the feedback, or even the times of meetings that they want to set for themselves, which doesn't always work with the timelines of how deployment works for investors. And if it's a very polite no as well, we might also end up with more grief and harassment in our inboxes as well, which is not a fun thing to do. So similar to Angelica, we are people. And we are also people who have vast networks talking to other investors as well. So when it comes to the referencing of other founders that we might come across, there's a network effect in just being respectful and a good person in actually engaging investors and communicating quite effectively as well as to what you're doing while you're seeking an investor for the round that you're raising as well.
If I may come on that point, Anton, bear in mind, if you get annoyed with an investor, investors talk to investors. They co-invest, and if you're getting a reputation of being a jerk, that will just put you down. If they're saying no, they've probably got a very good reason at the end of the day. And at the end of the day, bear in mind, every time you go out to, let's say, a VC, at the moment, only 20% of VCs are investing in new founders. About 60% are investing in following rounds, and some of those are not deploying for either economic reasons or that they're currently deploying. So there's many reasons why they may say no, and it might not, even if they might even like you, but they've got other reasons. So respect they've got a business to run at the end of the day, and don't be a jerk.
And Dharma, how dare you not just sign a blank check for me? You're saying you're an impact investor. I've got the best idea in the world, and you're asking me for what? A pitch deck and a business plan and financials?
Not even.
Can't you see?
Not even at that stage, because quite pre-product, pre-revenue, you don't have revenue, you don't have the financial plans, and that's something that BGB can definitely help you with. But some of the responses that I've gotten from founders, and there's definitely a pattern to this as well. So sadly, this doesn't happen in isolation. And again, as Dan said, founders talk to each other, especially if they're women founders, investors in the space as well. So I've had a few responses where people were literally incredibly rude and unkind, and where the managing partner, who is a man in our firm, had to step in and actually, mitigate some of the future harms that came from that as well. So it is a weird funding landscape at the moment, and I appreciate there's a lot of ghosting that happens from the investor side as well. But if it's a clear no and you've received feedback as to why it's a no, then respect that and move on to the next investor.
Well, hang on. I don't really buy that female investors talk to each other, because there's only 4% of you that are at a decision-making level. That's one. And two, when it comes to attracting investment, if you're a female founder, I know I'm going to sound morbid here, but you are in the UK, you are more likely to get run over by a bus than get investment if you're a female founder. Anyway, there's a lot of SHIT that sounds funny in my head. Clearly it's not. So we'll move on to the next stage. And I think we've got
Anton, I will challenge you on the point around there are not enough women investors. There's a huge amount of women investors. Perhaps they're not in partner roles, but they're definitely
that's what I meant. I meant in decision making, i.e. beyond principle upwards. That's what I meant.
Yeah, but even if it's an analyst, if it's an associate, if it's a principal, there is so much power in actually lobbying your partners into making those investment decisions as well. So I think regardless of which role they play in a fund, there's a huge amount of women investing in this space as well. And that's potentially one of the things that founders can take away from, is actually understanding the sphere of influence and how funds are structured, whether you really need to lobby your analysts and associates really hard to make a case for your investment to be taken to the partner level, or whether there are other pathways for you to be able to influence the decision making as well.
Here, I second that. I think it's time we get on to some questions. Now, we've got some that were sent, but we will start with those that could be bothered to come here and do it live. So we'll start with Ida, who's recently started joining us, and I can see a burning desire to not only learn, but listen and take notice. So, Ida, are you audible? Can you hear us, buddy?
Yes, I can. Thank you guys for having me. And thank you again,
Good
Anton.
man. Thank you very much for joining us again. Please, quick introduction. It has to be done in less than a minute, and then the question in less than a minute. Take it away, buddy.
Okay, perfect. So, hi panel. My name is Hader. I'm building a SaaS B2B2C startup in the pre-seed stage. Basically, we're doing digitalizing the after payment system. So digital receipts and loyalties for SMEs. So instead of customers giving out their emails at the till and have the whole friction process, all it would be is you linking your card via our app. And then once you tap your link card at a partner store, you get digital receipt and loyalty straight away. So Mike, with that being said, I have two questions. The first is, at pre-seed stage, what would you absolutely need to see before you write a check? And what do founders think matters but doesn't really? And a second question is, how do you evaluate a pre-seed startup with limited to no traction, but a strong vision and technical wedge?
Very good. Thank you very much for that, Hader. Hader, can you just give us a quick understanding of where you're at the moment? have you started putting any product roadmap in place, or have you started building, or are you talking to any potential collaborators? Anything? What's your situation, if you don't mind my asking?
Oh, no problem. So currently I'm building the prototype of the mobile app. I built my pitch deck. I've gone to a few events and spoken to VCs like Bright Eye Ventures, where they've given me amazing advice, also telling me you should also reach out to accelerators to try enhance my knowledge and give it the best possible start as possible. And yeah, so just currently looking to join any accelerators and raising, but making sure I have as much information as I can before doing anything.
I hear you. And what's your forte? Are you a developer? Do you have any knowledge in the industry? What's your strengths in this endeavor?
Yeah, so funny enough, I started coding when I was 12, so I have a coding background. I've joined a couple teaching groups, right? And also got certified in cybersecurity. But for like day jobs, I work as an accounts executive. So I'm more of a salesman. I went down the salesman route.
I hear, but you can, if you had to code, you could probably, I don't know, either via Lovable or some other vibe coding, you could, and I wrap up with the help of AI, at least wrap up an app that could, and I pass for half decent.
Yeah, so with the AI route, we could definitely do that, but some things are a little technical with the card linking stuff. So as good as my coding is, I don't think it gets that. Oh, I don't think I can get it down to the.
I hear.
Yeah.
Well,
Sorry.
you're in luck. You're in luck, because if you find the right partner, as in banking partner, you can get an API that literally all it takes is maybe a couple of prompts on Chat GPT or some other top-notch AI, and you could connect that AI that cards with your app. But let's focus on the questions now. So maybe on this
Thank
one.
you.
No, you're welcome. Maybe on this one, 1 minute each. And by the way, everybody, obviously this has been recorded and we've now started editing and publishing these as podcasts. Spotify, YouTube, soon we'll start on the others as well. So bear that in mind that you can tune in after. But for now, if you missed anything, maybe we can start with Dharma, and then we can go on to Tommy, Angelica, and last but not least, Dan. Let's try and keep it to a minute each. What's your advice for Haida?
Haida, thank you so much for providing context as well. I've put it in the chat with the link, so you'll be able to click through. But because you're operating sort of in the fintech payment provision space, there's the NatWest Accelerator, as well as Founders Factory's fintech program that they do with Aviva. Two accelerator programs that also come with cash, so equity investment. So really worthwhile looking into those as well.
Hang on, Dharma, just 1 second. Because I don't think NatWest comes with cash, does it?
Sorry, which one?
You mentioned NatWest. Does it come with cash? Because I don't think it does.
No, it doesn't. But it gives you. You'll get to collaborate with a lot of great peers and see what the standards are, and they'll help develop your product and your proposition at the end of the day, and give you. They do provide in kind a lot of expertise.
Yeah.
On the fintech side. That's the bit. If you're not from that world of banking and stuff.
But the Antler and sorry, Dan, actually jump in because you also mentioned 2 other programs, so go for it.
Yeah, I mean, Antler's good because I mean, Haida, I don't know whether you are. If you're just a solo founder, it's quite tough. So, but someone like Antler, they may be able to help you find a co-founder and stuff. So, I think to answer your specific question, I guess the first thing when you pre-seed is, first of all, they're looking for someone who's likable, which you sound very likable. Someone who's got some, the fact you've got some tech savviness is good. The fact you said my magic word, which is sales, whether you're selling to yourself, selling a product, selling to an investor, is great. But doing this alone is a tough gig in my view, and somewhere like Anla will help you with that. Fine. So it might at some point make sense to look for a co-founder, but equally you want to spend a lot of time figuring out that. So there's some fintech programs. JP Morgan have a fintech forward program. There's various things going on with Barclays Rise as well. So, but to me, you know, we're looking for they're looking for a clear idea and a clear proposition. I think what you're doing, there's companies already do receipts like slips, and there's companies like Oya doing loyalty. I've never seen the two combined, so I think it's quite compelling, particularly with the big push for being able to show receipts by the HMRC for the 7 years back. So I think it's quite promising. I'm happy to take offline and point you in a load of directions.
Very good one. Thank you very much. So now Dan's gone with his answer, so perhaps we go to Angelica and then Tommy then, please.
So I think that the first question was what investors are looking at with this type of early stage company and how they evaluate it. I think you already received quite a lot of very good advice for where you are right now. From SFC Capital perspective, we are looking mainly at the team. So if you are a solo founder, that will be tough. We're looking at how far you managed to get. So we'll assess, and that goes now into how we evaluate it. So we'll evaluate the strength of the team. Is there a team? And that team, do they have complementing skills? Are they covering the key roles that are the most important at this early stage? And then what have you achieved so far? Is it just an MVP, or do you have any external validation? So for example, any potential partnerships, any pilots, any letter of intent, anything that shows that you were on the market and that market expressed interest. And there's a number of different things. I will not go into the details, but there are elements that we actually give points to. So we assess them one by one. And you need to remember that you are competing against other startups. So it might be that there is at some point in the year, there are not that many opportunities and you might stand out, but it might be that with the same progress that you've made, you will be just behind when competing with other companies that are looking for funding at the same time. So it's best to approach investors when you're really solid, when you have achieved as much as possible, as much as you can with what you have. But based on what I heard about you, I think that going to accelerators, and some really good names were mentioned, seems to be the right step before you actually go to institutional investors, just because you will be competing with companies that probably will come with a little bit more progress.
Why isn't there a fire sign in the emojis in our MS Teams call? There should be for all the gold stuff we're getting. Mr. Breen.
Yeah, you've been given some really good advice already by the other three. So I would just say, when you're going down the accelerator path, you know, it does sound like you can do obviously some coding yourself. You're not maybe technical enough for some aspects of this. So I just try and frame in your mind what an ideal co-founder might look like. You know, it sounds like probably somebody that's come from a bigger business like Revolut or some other fintech that actually has experience working with open banking in the back end is probably what you're looking for, if you can find someone like that and that you get on with. But I would say in the meantime, you know, obviously there's technical hurdles that you can't come over yourself, but given you actually can do some coding yourself, I presume you're pretty capable with things like with tools like Replit or Lovable, and you know, maybe you can actually spin up, you know, what looks like a prototype, so it's not actually technically connected to a card, but you can at least get something working where there's a few clickable buttons that shows, you know, people don't need to see in the demo what's happening in the back end with open banking. They just want to see what a user would actually see in the app. So maybe you can create a demo where it just shows that, you know, you've paid for something, then the receipt comes through and you've gotten a reward, and you can just have it like then turn that into a loop video on a website. So at least you can kind of show people when you're trying to explain the idea what you think it will look like in production, like what the user is actually going to engage with, and not get too, you know, lost in the technical aspects of how you connect all the open banking and build the product, but just try and show what your vision is. And that might just help whenever you're going to apply for accelerators, or you're talking to, potential investors or angels or anyone like that, just having something you can whip up on your phone quickly. So, hopefully you can spin something like that up on a vibe coding tool over a weekend or something, just as a little demo.
Thank you very much, Tim. I really appreciate that. Sorry, buddy. Did you want to say something?
Yeah, I just want to thank everyone for the advice. I have everything written down as per usual. Wanted to also note at the top, Tommy Breen. Sorry if I pronounced your name wrong. Funny enough, I actually did mock up a prototype, and it's working right now, which I'm quite happy about. And yeah, and again, thank you everyone. I'm definitely gonna send all of you guys a connection request, and please do forgive me if I ask you more questions in LinkedIn.
Best of luck.
Yeah, please do.
It's brilliant. Ada, I should have mentioned this yesterday, but since you brought up the traction thing, there's a couple of things I would, first and foremost, before that, please listen to the panelists. You definitely should go to an accelerator. I initially would focus on one that comes with money, or two that comes without some kind of a contract, but most likely money, I think, is your best bet. Find yesterday, not today, not tomorrow, yesterday, find somebody that will help you build at least an MVP, and also somebody who's got connections and knowledge and experience in fintech, but especially open banking, Now, what I would do is I would do two things right now. Simultaneously, as you're finding those collaborators, be it co-founders or initially as advisors, however you want to do it, right? But simultaneously with that, I would reach out to, I don't know, 100 or more accountants in London that work and have a ton of self-employed people slash oh my God, I've just lost it. My brain's just gone blank. What do you call, oh Jesus, what do you call it when you don't have an LTD, but the other one that you just work on your own? This is sounding really...
Self-employed. Self-employed.
No, not self-employed. What's the other one? Oh my God.
Freelancer?
I just lost it. Anyway,
But
so you can have...
Anton, just one thing I'd push back on there is, particularly with the current trend in incubators, for this stage particularly, judging them by whether they give money is probably not a good criteria. There's some very good ones who give a lot in kind, which is far more valuable. And to me, it's one thing if you go into a Y Combinator or a Techstars and you're a team and you build and everything else and you've got some letters of intent. But at the stage when this is, but a lot of the early stage incubators that give a lot more in time than they do in cash are actually really good. Judge them speak to some of their existing cohort members, judge them by their progress, their exits, where they've migrated. There's a good list of ones that have really got good traction. Antler was a good example.
Well, they've got obviously the ones that have a good traction and they've helped others before, that is brilliant. But at the end of the day, there are out there a billion accelerators and incubators that claim to do X, Y, Z, and in the end, they end up not really doing much.
But equally, I think yes, I'm saying judge the ones that are really good by their performance and track record, but don't in the early stage. But actually, some of the best ones actually do not give cash, particularly when you're pre-seed, early pre-seed, like Hadar is.
Sorry, did you say the best ones don't actually give cash?
At this stage, there's some really good ones that don't give, but they give a lot in kind.
I see. Okay, it's a different experience, but
don't treat incubators and accelerators. I mean, they're not always necessarily good partners to be as investors as well. Always a bonus to get cash, but at this stage, experience is the learnings and developing a business is what's the most important thing. You've got to balance the two out.
Okay,
because I equally know companies who give cash, take the equity, and give little support and develop the company. So you've got to
obviously, if they're not adding anything, true, but also we're in the business of competing with those people. So we bring here some of the top people out there, and I've seen a lot of these other accelerators that have people given advice that they've never been in a startup in their life, let alone taken one to success. But fair enough, that makes sense. And that is your view.
Just to
Go on.
jump in on this, I think the formula that founders need to take away from this is basically what's the additional value add that these programs and accelerators bring. Saying this myself because we also run a program where people get 60K investment upfront, but the value add for specific people can be based on sort of the subject expertise, the business development opportunities that they might bring. So MSD UK, for example, is an equity-free program, but provides such great opportunities to actually provide them with opportunities to get into B2B enterprise level SaaS customers. So anyone who's building a B2B SaaS business is very much in a really good position to get their first few customers through that program. Whereas if you're in a fintech space, if you're joining a program that's affiliated to a bank or that has a very specific focus on also again opening up business development opportunities in the financial sector for you, then that's a particular value add that you need to look at, right? So it's more of a discussion.
Absolutely.
What else besides capital you might need at the stage that you're at that could be truly beneficial for you to enable you to grow much faster than you would have without those connections? Because ultimately the reason why accelerators and programs, incubators exist is really to hone down and help you hack the system, because you yourself might not have access to those networks. And that's where the due diligence of founders come into play as well. So hopefully that's a helpful alleviator in terms of determining who might be best for you to pursue.
Absolutely spot on, Dharma. And there's one thing that I agree that unfortunately the majority of founders I meet, they want accelerators and all VCs and so on to give them money, but instead what they actually need is one to guide them in the right direction, and perhaps most importantly, either open doors or open a procurement / supply chain register, and totally agree with that. Right, well, thank you very much for that, Dan. I would, sorry, Hyder. So I was about to say I would go to accountants that deal with sole traders. That's the bleeding word I was looking for. With sole traders especially, and very small businesses, to see if they are willing to introduce you to their customers. And I would look for the ones that have the largest numbers out there, and then use those as potential, as I think it was Angelica who mentioned LOIs, letters of intent. And with that, you can go to these accelerators and potential investors, and also especially potential co-founders, to work on what you want to build. But if you have those, that could be a really, really good into. But definitely go to a bank out there, because a lot of these neobanks will have means and ways. If they see that there is a demand, if they see all these, you know, partnership potentials with these accountants and so on, I often get reached out by banks that they, what was it, the latest one? I think it was Revolut the other day. That they, you know, have various APIs and sorry, Tide, not Revolut, my bad. Tide literally only last week reached out. They have various APIs that they can plug in quite easily. Obviously, not everybody. So, you know, you've got to show them that you're worth it, but that there is potential there. I hope that helped, and we'll now move on to the next one. Rightio, quick reminder to everybody, if you are on the live streams, whether you're on LinkedIn, YouTube, Facebook, Instagram, or Twitter /X, we can't monitor your questions there. So you'll have to join us here on Microsoft Teams. It's audio only, and it means you can join us from anywhere via any platform or device. If you're on the live stream and you've got questions, you can either check the link that is on most of those live streams, or simply go to our website, startuptoscaleup.club. So again, the website, it's startuptoscaleup.club. You scroll down a little bit, find today's session, which is Startup Fundraising Q&A 162. So it's 162. There, you'll be able to click join. It's a quick registration on Luma, and on Luma, you'll find today's link and just simply click on it. Today, we're taking any questions you may have on fundraising, and there are no wrong or right questions because it's a learning curve for us all. Now, if your questions today are not on fundraising, then please save them for the other conversations we run. Monday's talent, Tuesday's product and tech, Wednesday's growth, Thursday's fundraising, second Friday of each month is UK startup law, and third Friday of each month it's UK startup finances. They're all from 12 to 1 p.m. UK time. They're all available on our site, startuptoscaleup.club. And when you're there, you may also want to join a WhatsApp community we have. We have some amazing groups that you can connect with fellow founders, investors, operators, and of course, our second to none panelists / mentors. I'm also soon going to share a link of a group that we created simply for startup fundraising. And now, without further ado, I believe I have unmuted you, Ananta. Can you hear me? Are you audible? Ananta, I have unmuted you and given you the mic. So you just need to click the microphone on your screen, basically. Okay, let's make you a presenter and see if that works better. Okay, so
Yes.
that should work. Perfect. Please, quick introduction and fire away with your question.
Thanks, Anton, for the access and for the session as well. And thanks, panelists, for the do's and don'ts. It's very, really informative. I'm creating, for the last 1 year, I've been working on a product, and the product is almost in a ready state. So I'm working on the basics of 3 concepts like smarter and smarter, greener, and what is that? So sorry, my mind goes blank. So it is a mobile app which helps any 2 people like who are not connected just to reach out to each other. We always end up in a situations where we need people to be connected, like when someone parks our car, blocks our driveway, or when we see a lost pet on everything, we don't know the owners, but we need to reach them. So the product aims at just connecting the strangers to the owners without just exposing their personal identity and everything. The app is pretty much just like wanted to reach out to the basics of the users, and I have just done everything, and the product is ready, fully ready. There are a couple more 5 or 6% of work is still pending, and which will be ready by end of this December. So 2026, I'm planning to launch it. I got the SES advance approval as well. I need to just now start looking at investors itself in parallel while I'm just launching it. I'm going to have increase the user base as well. But the more I read about the blogs and everything, one question is just like most investors look for the products with AI involved in it. But for the last 1 year, when I'm just building the product, I'm just focusing only on the basics of the pain points which I'm trying to fix it. And I have not forcefully included AI into the project and all. So is that a main criteria? Should I be worried, or should I just like ignore it on the product?
That's a very good question. Ananta, 2 quick questions before I pass you on to the panel, please. Number 1, where are you based, Ananta?
I'm based in London, southwest of London.
Southwest London, good. And 2, so is this the kind of thing, I don't know, just for argument's sake, if I park my car somewhere, there's a QR code that people can scan to reach out to me? How would that work, if you don't mind me asking?
Yeah, it is similar to the QR code, how it functionality, but QR code has its own sort of disadvantages. So this one is just like a step up using the NFC codes. So that is one way, and it's not just the strangers to reach out. It also lets the local people to reach out to them. So if there is a new salon and they wanted to just like announce an opening, they want to do that. They have organically, they know the local people who are just like registered to the services. So they will be reached out to that.
Okay. And what stage are you at right now? What have you done so far?
So the product is fully ready. I have tested it within myself, and I'm just like wrapping up the critical bugs. Once it is fixed, then I'm ready.
I hear you. And what are your strengths? Are you a seller, a coder, an operator, and do you have any co-founders?
No, I have not found a co-founder. I've just been running through the profile in Y2 Combinator for now. So just like don't want it to end up having a co-founder for the point of having a co-founder. So I just want someone to do that.
I hear it.
I'm
Are you a coder then?
sorry.
Sorry, what is your specialty? What is your strength? Are you a techie? Are you a coder? Okay, perfect.
I just created the end-to-end product, admin portal, and the static sites, and all the video audio calling services, everything on my own now.
I hear. And last thing, if I may, number one, why do you need the money? And two, how long can you keep the lights on yourself?
I'll be just like this product needs kind of a sticker that's been distributed to them, so it is pretty much easy for me to just get that user base. But then with the proper investor and everything, it is pretty much helpful for me to scale up the project. And currently, I use a third-party tool for video audio calling services. But for the phase 2, phase 3, and further downline of the phases, it would be good to have my own sort of kind of a WebRTC development. So with the good investors in backend, I can just create a much better roadmap for me.
I hear. Okay. Personally, don't worry about AI, but I would love to hear from what the panel got to say. So maybe we can start with Tommy, Angelica, Dan, and last but not least, Dharma, please.
Yeah, it's an interesting conundrum, but like my feeling would be, if you don't need AI in the product, don't put it in. But it is undoubtedly, we are in an environment where a lot of investors are looking for, you know, AI based products, and there is a focus. So like, it is tough, but you know, at the end of the day, you have a vision for what your product is, and if it doesn't need AI right now, don't squeeze it in just so you can put it on the deck, because if it's not really doing anything anyway, once investors, you know, maybe it gets more visibility than it would otherwise, but once, you know, any serious investor looks at it, they'll kind of see that the AI is a pointless feature in there anyway. So I just keep building what you think you should, like, you know, what you want to build and what the product is, and don't just put random things in there for the sake of it. But you know, it is tough, and maybe you'll get some better traction with angel networks and things like that. But it is definitely like tougher out there if it's not an AI product. But I'd also be interested to hear what the other panels have to say about it too.
Well, with AI today, every startup wants to be an AI startup, and investors started to be a little bit, I wouldn't say allergic because that's too much, but careful when they hear AI. We are actually carefully verifying what there is AI about this, and it's not necessarily it's a keyword, but it's not something that will guarantee investment. That's one thing. In your case, I was wondering, do you have a product or do you have a business? Because if you have just a product, then that will be tough to go to investors. Investors want to invest in businesses, so you have to have a business model. You have to show that there is a market for it, that there will be someone paying for it, that you will actually make money, particularly if you don't have a wide background in the market that for which you are going to provide the service, this app, or if you don't have co-founders and enough traction. So my concern here is that investors won't see that there is business. They will just see, okay, a nice product, it might be useful to some people, but is it going to generate revenues? And in your case, you know, some founders, particularly exited founders, could get away with this because they will pivot, they will change, they have track record to show that they can achieve something even if they don't have much when they go to investors. But if you're not exited co-founders, I think you will need much more to prove that you have a business and not just a product.
Yes, Angelica. Yeah, there is two parts of financial business point of view here. People do use the portal as their marketing site, so they pay for the marketing content, and there will be sponsors who wanted to advertise on the stickers, which goes with each and every tax which we are circulating it. So it will be generating revenue on 3 different angles.
But remember that you need to validate it. It cannot be just an idea that this is how it can work. You actually have to show that there will be interest to pay for it.
Correct. Yeah. Okay. Got it.
Thank you very much. I think it's Dan and then Dharma, isn't it? Dan?
Yeah, I mean, so this allows two parties to communicate with one another without disclosing their details. So I think this comes back to the previous point, really. You need to verify that there's a demand from this. I mean, don't get me wrong, if someone's parked in front of my drive, I'd want to contact them, but I suspect if they've done that because they want to go to the football match, they don't want me to reach out to them. So you really got to validate the demand. What particular? I mean, you maybe didn't want to focus on around a particular problem when people are communicating with one another, because to me, it's, as you say, people could put a QR code on things. So you need to figure out how it would work.
Yeah.
And how frictionless it is, because if you're going on a portal, it could be quite heavy. You want it to be something very simple at the end of the day. There's a whole issues around here about consent and how it could be abused as well, where you've got multiple parties communicating, different parties communicating one another without disclosing their details. There's opportunity for abuse. So you need to figure out how consent and how this fits within the kind of privacy and consent and sales calling and various regulatory things. So understand, maybe speak with a friendly solicitor on whether, you know, whether there's any issues around this or something, who can maybe give you a bit of pro bono advice.
Okay.
Absolutely. That is a brilliant point, Dan. And, you know, what I would do if I were you here, I would look at things whether, you know, this could be anonymous, i.e. on the receiving end, but for you to become a member of this, you need to register with an ID or something. But again, to then do that, you really need to have some like really tight way of making sure that people aren't going to steal, you know, the data and so on, because that can be really risky. Dharma, what would you do here?
I think just building on what everyone has said, like really digging deeper into the value proposition and your user, and whether with the sort of exploration of AI, it doesn't necessarily need to be a prerequisite as part of your product, but potentially around sort of just automating workflows a lot easier. And also getting a bit more insight as to what sort of growth stage investors might be looking at, because there are a few who basically have very publicly also stated that they will not invest into anything that doesn't have AI in it, which doesn't necessarily mean that you have to follow the Pied Piper and down the road of AI adoption, but it's possibly also just looking at the signals that you might need to incorporate into your business if you want to grow and scale a venture backable business as well.
So, sorry if I understand it right. So at some point of time, you are recommending me to just look into the AI as part of the product, is it? Sorry, I missed the point.
I think it's mostly not necessarily as a component of your product offering, but at least sort of tweaking some of the workflows to make it easier and much more frictionless to deliver a service as well. So there's some really great tools out there like N8N, which is basically a Zapier on steroids, and a few other tools that might happen with different workflows, workflow automation as well.
I hear you. Yeah. Okay. Yeah. Got it. I'll just
basically now. Ananta, my understanding of what the panel is saying is that, you know, not having AI is not going to stop you from getting investments, but having AI may help you have a better product. But the bottom line and the fundamentals of this are that you need to have some market proof, i.e. to build something that is going to be making a lot of money. If you can convince investors that's the case, then you're laughing to the bank. We are now at 1 o'clock, top of the hour. So I am going to have to wrap this up. Hopefully you found it helpful, Ananta, and Ida, and the others. Next time, please ask your question right at the beginning so that we can get going. Before I let you go, team, I know some of you need to go. The rest that are here, any parting words? Shall we start with the ladies, Dharma and Angelica, if you're still here? Okay, Dharma, I think is gone. Angelica, any parting words from you?
Oh, well, I guess that don't jump on investors too early, too soon. It's good that you are doing this research and you participate in this type of events to learn more and absorb as much as possible advice. It is important, and going too early might be more damaging than waiting. So yeah, learn as much as you can before you approach investors, because that will make things easier.
Brilliant. Thank you very much for that. I think we have lost Tommy, so we've got Dan here. Dan, any parting words?
Yeah, I mean, build out a proper investor map of how much, when you're going to go out to an investor and what stage you will be. Make sure you've got the deck done, an exec summary. I'm increasingly seeing people pull together a full data room in advance. Figure out how much you're raising now, how much you're raising in your next round, at what valuation, and the follow-on round, and the instrument you can use. Really be precision sharp on those investors you're going out to. Are they going to be angels, angel syndicates? Are they going to be UK-based, US-based? What value are they going to bring beyond the cash at the end of the day? Really map that out. As Angelica says, don't go out too early. Go out when you're ready. Investors don't like second chances. They've seen you when you were a bit rubbish before. They'll think, okay, not interested. So go out when you're ready. Obviously, always better for the investors who sometimes are risk averse if you've got intentions. But I think one of the key messages from today actually comes from both of these is make sure you've got great product market fit, validated. You really know that there's a real demand for this. They really need this. A need is something you pay for, not something like a want. I want a Ferrari, but I don't need it. Okay, but I need a car. So really go out there and best of luck.
Well, thank you very much for your golden advice today, panelists. Also, a huge thanks to those of you that tuned in, whether it's via the live streams, those that were here live, and most especially those that asked questions. Next time, try and make it a habit to join us here on Microsoft Teams. It's audio only. It means you can tune in from anywhere via any platform or device. Obviously, like all our sessions, this is free. And just a couple of quick things before my parting words. I've just put in the chat a link to our WhatsApp group for startup fundraising. Please join that. For those of you on the live streams, if you want to register to future sessions, please go to our website, startuptoscaleup.club. Again, startuptoscaleup.club. You'll be able to there pick a session you want to join, and it's quite easy to register an RSVP. Simply click on your preferred session. That takes you onto the Luma event, and there you can register. And all you need to do is register once, and then that's it. And then you can just click whichever session you want after, basically. Now, as far as the events, I'm not sure if I mentioned, we run 6 regular events: Mondays talent, Tuesdays product and tech, Wednesdays growth, Thursdays fundraising, second Friday of each month, that is UK Startup Law, and third Friday of each month, it's UK Startup Finances. They're all from 12 to 1 p.m. UK time. They're all available on our site, startuptoscaleup.club. Now, we've also started editing and publishing these sessions as podcasts, so you can tune in if you've missed anything and listen to them after. As far as my parting words are concerned, just remember, the startup journey can be both exciting but also quite challenging. So try to have some fun in the meantime and be kind to yourself and everyone else for that matter too. Otherwise, hopefully we'll see you tomorrow for Startup Legal Q&A. We've got 4 amazing UK lawyers that will take any question we have on startup legal stuff. That is at 12 o'clock. But for now, thank you and God bless.